Right now, as I record this, the United States and Israel are launching missiles at Iran. Bombs are falling on Tehran. Multiple military locations across Iran are being hit with precision strikes. Israel has declared a state of emergency. Bomb shelters are active. U.S. embassies across the entire Middle East are on lockdown. This is not a drill. This is not a rumor. This is happening right now in real time. And while the world watches missiles fly, something extraordinary is happening in the financial markets that almost nobody is talking about. Gold just hit $5,294 an ounce, not on a normal exchange. Traditional gold and silver markets are closed right now. It is the weekend. Conx is shut. London is shut. Every major futures exchange in the world is dark. They do not reopen for another 34 hours. But tokenized gold, which trades 24/7 on the blockchain, just printed $54.94. That is $250 above where gold closed on Friday. $250 in a weekend. While every traditional market is closed and bombs are falling on a country that sits next to 20% of the world's oil supply, that number is not just a price. That is the sound of the global financial system screaming. But here is the number that truly stopped me dead this morning. And I think this is the most important number in this entire video: silver buyback price in Shenzhen, China. In the Xibi Precious Metals District, which is the largest physical gold and silver trading hub in all of China, the physical silver buyback price between small distributors jumped almost $20 per ounce equivalent today. $20 in one day. The buyback price for physical silver in China is now above $120 per ounce. The last time silver closed on the international spot market, it was around $93. China is paying $120. That is a $27 premium, almost 30% above the global price. And this is not the selling price. This is what dealers are paying you if you walk in and hand them your silver. They are buying back silver at $120, and they still think they are getting a deal. And then comes the detail that should send chills down your spine. Most small Chinese silver distributors are not selling their physical silver. They are refusing to sell. At $120 per ounce, the people who make their entire living buying and selling silver have decided they would rather hold it than sell it. Think about what that means. These are business people. Their rent, their employees, their families depend on moving metal, and they have looked at what is happening in the world right now. They have watched missiles hit Thrawn, and they have made a calculation. The silver in their hands is worth more tomorrow than the cash they would get today. When the people whose job it is to sell silver stop selling silver, something has fundamentally broken in the market. And when that break happens during an active war, prices do not go up 10%. They go up in ways that break every model on Wall Street. Welcome to the hidden economy. If you are new here, this is where I break down the data that the mainstream media is not connecting. Hit subscribe right now because this situation is developing by the hour, and you are going to want to be here for what comes next. And do me a favor, hit the hype button underneath this video right now. What is happening in gold and silver this weekend is historic. More people need to see this. Now, let me break down what is actually happening in Iran right now, because if you do not understand the war, you cannot understand why gold just hit $54.94 and why silver is trading at $120 in China. The details matter. Let me give you the details because the specifics of this attack matter for where metals go from here. This is not a limited strike on one facility. This is a coordinated multi-location assault. The Israeli government has confirmed through their own media that targets include military installations, defense ministry sites, and locations connected to Iran's missile program. The strikes are precision targeted. Each missile sent to a specific address. And here's what makes this different from previous exchanges. Israel has declared a full state of emergency, not a partial alert, full emergency. Citizens told to stay near shelters. The U.S. embassies across the Gulf states, including Qatar, have ordered all personnel indoors. When both Israel and the U.S. go into lockdown mode simultaneously, this is not a one-day event. This is the beginning of something. Let me explain what this means strategically, because most people are going to hear Iran war and not understand the implications for the global economy and for metals. This is a preemptive strike. Iran did not attack first. Israel decided that Iran's nuclear program and missile development had reached a point where waiting was more dangerous than acting. Netanyahu has made this his life's mission. He has been saying since the 1990s that Iran is on the verge of developing nuclear weapons. There are viral clips of him going back to 1992, 1995, 2012, 2015, every few years, saying Iran is months away from a nuclear bomb. And every time through cyber attacks, through assassinations of Iranian nuclear scientists, through sanctions, Israel has managed to delay that program. But recently, something changed. The International Atomic Energy Agency reported that Iran has moved some of its most highly enriched uranium, which is bomb-grade material, into underground tunnel complexes. The IAEA said in a confidential report that they no longer have full visibility on 60% of Iran's enriched uranium reserves. That means the international community does not know exactly how close Iran is to a weapon. And for Netanyahu, that uncertainty was enough. When you do not know if your enemy has a nuclear bomb, you act before they can use it. That is the logic behind what is happening right now. The timing is critical. Donald Trump is the most pro-Israel president in American history. He has said so himself. Recently, Trump made public statements saying Iran is building missiles that could reach the United States. Even though U.S. intelligence reports do not support that claim, but it tells you where Trump stands. He is echoing everything Israel says. He is providing cover. And for Netanyahu, this is the golden opportunity. A U.S. president who will not just allow, but actively support a strike on Iran. That window might not last forever. So they are acting now. Now here's the question that matters for your money. How far does this go? Because the answer to that question determines whether gold goes to 6,000 or 10,000, whether silver goes to 150 or 300. J.D. Vance was asked recently if the U.S. would get into a long war with Iran. He said, there's no chance. Fast in, fast out. But here's what history teaches us about that kind of promise. The U.S. said the same thing about Afghanistan. Fast in, fast out. 20 years later, they were still there. They said the same thing about Iraq. Fast in, regime change done. It turned into a decade-long occupation that cost trillions. Russia said the same thing about Ukraine. Special military operation done in weeks. 3 years later, they are still fighting. Wars do not follow plans. They follow their own logic. And once missiles are flying and people are dying, the situation spirals in ways nobody predicted. If this stays limited to precision strikes, and Iran absorbs it without major retaliation, markets will be volatile but manageable. Gold stays elevated, silver stays in the 90s to low hundreds, that is your floor scenario, and even the floor is historically high. If Iran retaliates, which they have already signaled they will, then we enter a cycle of escalation, strike and counterstrike. That is when oil becomes the weapon. Iran sits next to the Strait of Hormuz. 20% of the world's oil supply passes through that narrow waterway every single day. Iran does not need to win a war to devastate the global economy. They just need to threaten that choke point, mine the strait, fire a few missiles at oil tankers. Even the threat of disruption sends oil to $150, $200 a barrel. And when oil goes to 200, inflation goes to levels we have not seen since the 1970s. Let me make that real for you. Gas at the pump goes from $350 to $7 or $8 a gallon overnight. Everything that gets shipped by truck, which is everything you buy, costs twice as much to deliver. Your grocery bill jumps 30 to 40%. Heating your home costs double. Airlines raise ticket prices by 50%. The entire supply chain that keeps the economy running gets hit with a cost shock that feeds into every single price in the country. And this is not theoretical. This is exactly what happened during the 1973 oil embargo when Arab nations cut supply to the U.S. Inflation went to 12%, stocks crashed, gold tripled. The only difference between then and now is that the global economy is even more dependent on Middle Eastern oil than it was 50 years ago. And the Federal Reserve, which is already trapped between inflation and recession, has absolutely no tools left. They cannot cut rates into an oil shock. They cannot raise rates into a war economy. They are completely paralyzed. PPI already came in at 3.6%, 6% core just days ago. That was before bombs started falling on TAN, before oil risk became real. Inflation was already reaccelerating, and now you're adding a potential oil supply shock on top of it. The Fed is not just trapped anymore. They are buried. And that is the scenario where gold and silver go vertical. Not up 10%, not up 20%, vertical. Because in a world where oil is spiking, inflation is out of control, wars are escalating, and central banks are helpless. There are exactly two assets that have protected wealth for 5,000 years: gold and silver. Everything else is a promise from a government. Gold and silver are the only money that does not require trust. Now, let me talk about Monday morning, because I do not think most people are ready for what is about to happen when that opening bell rings. You already know tokenized gold is at $54.94, while traditional markets are shut. Here is what most people are not thinking about. Every institutional trader, every hedge fund manager, every central bank trading desk in the world is sitting at home right now doing the same math. They went home Friday with gold at $52.50. They are watching a war unfold. They know tokenized gold is 250 higher, and they are all planning to buy the second markets open. Not some of them, all of them. That is not normal demand. That is a stampede waiting for the gates to open. The opening is going to be violent. We could see the biggest single-day move in gold in modern history. And silver, which moves with a multiplier because its market is so much smaller, could gap up even harder. When the silver market is this tiny and this much money is trying to get in at the same time, the price does not climb. It teleports. Now, let me connect this to China, because what is happening there right now is the single most important signal in this entire video, and I think most people are going to overlook it. I already told you the numbers. Silver at 120 in Shenzhen, dealers refusing to sell. But here is what those numbers actually mean, and why they should matter to you more than any missile strike. The spot price you see on your screen is a paper number. It is calculated from futures contracts that are settled in cash. Nobody touches metal. The buyback price in China is what a real human being will actually pay you for real physical silver in their hand. When those two numbers diverge by 30%, the paper market and the physical market are no longer pricing the same reality. They have split. The paper market says silver is 93. The physical market in China says 120. One of those numbers is wrong. And I'm telling you, it is not the physical market. The physical market is where the truth lives. Because at the end of the day, you cannot build a solar panel with a futures contract. And you cannot protect your wealth with a paper promise. You need the metal. And the people closest to the metal, the dealers in the largest precious metals district in China, are refusing to part with it at any price. Let me zoom out and connect everything, because today did not come out of nowhere. This has been building for months, and the warning signs were everywhere if you knew where to look. China reclassified silver as a strategic material and choked exports to 44 companies. Comex vaults in New York have been draining month after month. Mexico, the world's largest silver producer, has mining regions in active civil war. Shanghai premiums were running 14% above international spot. Physical dealers had lines out the door. PPI inflation came in massively above expectations. Just days ago, every single one of those catalysts was already in play. And then missiles started falling on Iran. What happened in 48 hours is that every simmering catalyst went from warm to boiling. Gold did not spike because of one event. It spiked because 10 events stacked on top of each other, and then a war broke out. This is not a single catalyst story. This is a system under stress that just got hit with a sledgehammer. So let me recap where we are right now, because I want to make sure every single person watching understands the full picture before I give you my scenarios. War is active. Gold is at $54.94 on the only market that is open. Silver is at 120 in China, and dealers refuse to sell. The world's oil choke point is one decision away from being disrupted. Inflation was already running hot before any of this happened. The Fed has no moves left, and traditional markets do not open for another 34 hours, with every major institution in the world planning to buy metals. The second that bell rings. If you understand all of that, then what I am about to tell you next will make perfect sense. Now, let me tell you what I think happens from here. And I want to be specific, because I think my audience deserves specific scenarios, not vague predictions. Scenario 1, limited strikes. The US and Israel hit their targets. Iran absorbs the damage, retaliates symbolically with a few missiles that get intercepted, and both sides step back from the brink. The coke crash accelerated over weekend in March 2020. The demand that has been building since Friday afternoon when these strikes began is going to create a Monday morning that people will talk about for years. For gold, I expect a gap up of at least $100 to $200 at the open. For silver, I expect a gap up of at least $5 to $10, and those are conservative estimates based on the tokenized market pricing. If the situation escalates further between now and Monday morning, those numbers get bigger. And I want to be clear about what a gap up means for people who are not familiar with the term. It means the price does not gradually climb from Friday's close. It literally opens at a completely different level. You go to bed Friday with gold at $52.50, and you wake up Monday with gold at $5,500. That gap is not money that was made or lost while you slept. And the people who are positioned in metals right now are going to wake up to the best Monday morning of their financial lives. There is also a secondary effect that nobody is talking about. When metals gap up on a Monday morning, it triggers margin calls on the short side. Traders who were betting against gold and silver, who thought the rally was overdone, who shorted at $5,200 or $90, those positions are suddenly deeply underwater. When margin calls hit, those traders are forced to buy back their short positions. That forced buying adds fuel to the rally. The shorts getting squeezed push the price even higher, which triggers more margin calls, which forces more buying. It is a cascade, and it happens fastest in silver because the market is so small. A short squeeze in silver during a war with Iran and markets gapping up would be the most violent move in commodity market history. Now, let me address my holders directly. Those of you who have been stacking silver since $30,450, $60, I know what you are feeling right now. You're watching a war start. You're watching gold and silver explode. And part of you is excited because your position is printing. And part of you is terrified because the world feels like it is falling apart. Both feelings are valid. Both are human. But here is what I want you to remember. You did not buy gold and silver because you wanted a war. You bought them because you understood that the system was fragile. You understood that deficits were unsustainable. You understood that money printing had consequences. You understood that geopolitical risk was rising. And you prepared. What is happening right now is not a reason to celebrate. It is a confirmation that your analysis was correct, your preparation was correct, and your metals are doing exactly what they were designed to do, protecting your wealth when the world gets dangerous. Do not panic, sell into this. Do not try to trade the swings. Wars create volatility that will shake out weak hands. There will be days when ceasefire rumors send silver down 10 and everyone on social media declares the top. And then the next morning, Iran launches a counterstrike and silver is right back up. This is going to be a wild ride. Buckle in. Trust your thesis. The thesis has not changed. It has been confirmed. For those watching from the sidelines, I understand the hesitation. Buying silver at 93 or gold at 5,200 feels expensive, but consider this. Chinese dealers are paying 120 for silver and refusing to sell. The smart money in the largest economy on earth has already decided that these prices are cheap for what is coming. You can wait for a pullback, and it may come. Or you may watch from the sidelines as gold goes to 6,000 and silver goes to 150, and the pullback never reaches the price you were waiting for. I am not telling you what to do. I am telling you what the data says. And the data says the physical market has already repriced. The paper market just has not caught up yet. Let me leave you with this thought. Just days ago, the most likely scenario was that silver holds above 90 and grinds higher slowly. The base case was silver breaks 100 by mid-year. The full escalation scenario, the one that kept me up at night, was a war breaking out while the physical market was already in crisis. That was the nightmare scenario. In 48 hours, we have moved from the calm scenario into somewhere between base case and full escalation. The speed of this is breathtaking, and it is not slowing down. I want to say something that I think needs to be said. This is not a game. Real bombs are falling on real people right now. Families are sheltering. Soldiers are fighting. People are dying. And I take no joy in the fact that a war is making the metals I own more valuable. But it is my responsibility to tell you the truth about what is happening and what it means for your wealth. And the truth is that gold and silver are doing exactly what they have always done during times of conflict. They are repricing to reflect the real level of risk in the world. The paper markets are closed and pretending everything is fine. The physical markets in China are open and telling you the truth. $120 per ounce is the truth. Everything else is a lag. Gold at $54.94. Silver at 120 in China. Dealers refusing to sell. Bombs falling on Tran. Markets closed for 34 hours with pent-up demand building by the minute. Monday morning is going to be historic, and I will be here to break it down for you in real time. One more thing before I go. Central banks around the world have been buying gold at record pace for 2 straight years. They were buying when the world was at peace. They were buying during trade wars. They were buying during inflation scares. What do you think they are going to do now that actual bombs are falling in the Middle East? They are going to accelerate their buying. Every central bank in Asia, in the Middle East, in South America and Africa, every country that has been diversifying away from the dollar is now watching this war and making the same calculation. The dollar system is fragile. Gold is the only neutral reserve asset. Buy more. That institutional demand alone puts a floor under gold that makes pullbacks shallow and temporary, and silver rides the same wave with leverage. If you are new to this channel, I have been tracking this exact setup for weeks. I called the Iran escalation before it happened. I broke down the China-silver war. I covered the Mexico supply crisis. I showed you the PPI inflation shock. Every single video built the case for what you are watching unfold right now. Links in the description. Go watch them. They will give you the full context. Drop a comment. Tell me what you think Monday morning looks like. Where does gold open? Where does silver open? Does Iran retaliate before markets open? I want to hear your predictions. I will pin the best ones. Share this video right now. Send it to everyone you know. Anyone who has savings sitting in a bank account and losing value while the world is literally on fire. Because what is happening right now in the precious metals market is the most significant event since the 1970s oil crisis. And the people who understand it are going to be the ones who are protected. This is the hidden economy. Stay sharp. Stay stacking.